Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have ONESPAN Inc. Ticker is OSPN. Price at the point of filing is $12.97. This is not a recommendation, not advice. Please do your own diligence before investing into anything. And let's get right into it. Please write down in the comments below if you have invested, will invest, or why not into ONESPAN Inc. Description. We first wrote about ONESPAN nearly 4 years ago, in November 2018, and recommended you refer to that write-up for basic overview of the company and industry. In addition, the company held an Investors Day in May 2022, which is also worth reviewing. As we forecasted in our original write-up, the stock had roughly 100% upside potential over the next 2 years, which it achieved over the summer of 2020, hitting roughly $33 per share. Since then, the stock has crashed to levels below what we witnessed in 2018, despite a complete transformation of the company that we believe has set up the company for long-term success. Street estimates do not reflect any of these major changes, though that is partly due to management maintaining conservative full-year 2022 guidance despite outperforming in Q1, Q2, and Q3. Longer term, given notable correction in the stock, we see 100 to 200% upside here. OneSpan is a mobile and entity cybersecurity software company with an impressive e-signature business. The company caters toward financial institutions and counts 60 of the top 100 global banks as customers despite its small size. We believe there is significant cross-selling potential within the existing customer base for the e-signature solution, as well as prospects for new business wins. To truly pursue the opportunity, new leadership was required, which served as the basis of a major public proxy contest last year, as the board was a significant impediment to unlocking and maintaining substantial shareholder value. Here's a brief list of the major changes since last year. Since our last write-up and following an activist successful proxy fight last year, the entire board has been replaced with tech industry professionals and shareholder-friendly advocates. New CEO quickly hired and has led entire C-suite sweep. New CEO Matt Moynihan, hired in November 2021, former CEO of ForcePoint, a Vista Equity cybersecurity software company that was sold to Francisco Partners. COO has replaced nearly the entire executive team. Entire Salesforce rebuild, overseen directly by CEO. 30 to 37 million of cost optimizations identified, 50% of revenue. Roughly half executed to date, though none of this benefit appears to be factored into street estimates. Investor Day in NYC in May. Commitment to achieving 30 on a rule of 40 basis by 2025. New segment reporting. Security solutions, low growth, high margin, identity and mobile security solutions spanning software term licensing, maintenance and legacy hardware tokens. Digital agreements, high growth and low margin. Third e-signature player behind DocuSign and Adobe. New 50 million share repurchase program underway. Launch of new virtual room solution, a secure video meeting solution that incorporates identity authentication. Strong Q1, Q2, and Q3 Street 2022 performance. Beat Street figures, but only modestly raised full-year guidance following the Q3 print, leaving an attractive setup for 2023, as Street estimates do not reflect any of these major operational improvements. Despite the massive transformation that has taken place, including a new strategic vision with long-term targets laid out at an Investors Day, the stock price has nearly cut in half since mid-2021. Part of this is undoubtedly due to multiple compression in the software space, the market's distaste for small caps, and the illiquid nature of the stock. However, we believe the business financials and OSPN shares are set to inflect meaningfully as all this heavy lifting will finally get reflected in street estimates and investor sentiment. In addition, we believe OneSpan has substantial strategic value that should be attractive to a host of potential acquirers, such as Technology, Zoom, DocuSign, nCino, Fidelity National, and Fiserv. Security, Palo Alto Networks, Fortinet, Gemalto, Thales, RSA, Clear Lake Capital, STG, CA Technologies, Broadcom, IBM, Ping, SailPoint, ForgeRock, all owned by Thoma Bravo. Private equity, many suitors for a deal this size. Some of the part stories can sometimes fail to reach their full potential in the public markets. As such, we believe the board should consider strategic alternatives sometime in 2023 if the stock price does not reflect OneSpan's intrinsic value, especially after issuing 2023 guidance. This could include a sale of the entire company or selling off each segment to separate buyers. Financial/valuation. There, there are now two segments: security solutions, legacy hardware token business, which is in managed decline yet highly profitable. Mobile security suite, software based mobile and identity security solutions, now sold primarily as term licenses, subscription revenue. Maintenance, tied to legacy hardware and perpetual term licensing contracts. Overall segment should grow LSD as software growth offset hardware decline. Mid-60s gross margin expected to expand to 70% area given software mix shift. Digital agreements. E-signature cloud SaaS solutions. Differentiated given focus on financial institutions with identity security features in foundation. Expected to grow 30% plus annually with mid-70s gross margins. Operating margins will scale over time. Corporate expenses. Entire G&A plus some shared R&D and S&M. The company issued a long-term guidance at its Investors Day below, which we believe is highly conservative. While management openly committed to hitting 30 on a rule of 40 basis by 2025, their targets imply only reaching 20. 10 to 12% consolidated revenue growth plus 8 to 10% EBITDA margin. Clearly, they will either grow much faster, be much more profitable, or both. And while the street has yet to issue 2025 estimates, consensus estimates call for 5% growth and 1% EBITDA margins in 2024, significantly below management's conservative targets. All forecasts below assumes the cost optimization efforts flow through against solid growth execution. The company has $100 million of cash on its balance sheet today, no debt, and we model continued share repurchases. Revenue, adjusted EBITDA, and free cash flow are all set to inflect meaningfully in 2023 and beyond towards hitting the rule of 40 in 2026, making now the best time to buy OSPN stock. Street estimates are at the very bottom, and as you can see, those figures are well below ours. The company also reports segment-level profitability, though important to note there is separate corporate expenses line that they do not allocate to either segment. We have attempted to break down our expectations of R&D and S&M per segment relative to the respective segment growth profile. This exercise has given us increased confidence in the trajectory ahead, which includes an inflection in revenue, adjusted EBITDA, and free cash flow in 2023. In terms of valuation, we look at this three ways. 2023 ESOTP, 10x digital agreements revenue in line with other 30 to 40% plus SaaS growers. 14x EBITDA for security solutions and corporate expenses yields 3 to 4x total revenue. 2024 ESOTP, same multiples above, though dramatically improved profitability provides major uplift to value. DCF, this gives full credit for the long-term operating plan, including completed execution of the cost-cutting plan, which carries execution risk. In our view, a near-term sale around 2023 ESOTP valuation estimate would be a huge win for shareholders. If the company is not sold, we are hopeful the new management team will continue to execute well and drive a multi-bagger for shareholders over a few years. Catalyst. Sell side begins to properly model OSPN. There are no credible estimates today. Street EBITDA is at 2022, 1.6 million, 2023, 1.3 million, 2024, 1.7 million. Meanwhile, we are modeling 2 million in 2022, 2023 is 60 million, in 2024, 32, 2025, 53. Damn. Buybacks of shares using the net cash of 94 million on the balance sheet. OSPN gets acquired. Thank you very much for tuning in. Like I said, please write down in the comments below what you think of this opportunity. And yeah, see you next time.